Small Bay has been the talk of commercial real estate for the last year, a far cry from January 2025. Lucky today to have these three guys bring great perspective to what is not actually a nascent niche of CRE. Welcome to this week's edition of Storage Unlocked, brought to you by PB Brown General Contractors. I'm your host, Thaddeus Campbell. Very lucky to welcome three people who are helping to shape the conversation and the direction of this suddenly sought-after asset class. You guys can see Brett Turner, co-founder, senior managing director of BKM Capital Partners, Jeremiah Boucher, founder, CEO of Patriot Holdings, and Brian Whitmer, founder and managing director of Doors and Spaces. First and foremost, guys, welcome to the table. Very much appreciate you guys taking time out of your busy schedules to come and join me. Brian Whitmer, I'm going to start with you. You are live in Jersey City right now at the NAIOP event. Appreciate you carving out a little space at the hotel for us. Talk to me about what is making Small Bay Flex so attractive right now.
So one of the things, so we're at the NAIOP conference, and they specifically put a Small Bay speaker series into the program, which is telling of why we're all here on the call. What's making it exciting is the institutional capital has worked its way through the different sub-asset classes and understanding the merits of the big million square foot bombers. And then they've worked their way and said, okay, it's small tenants, smaller assets, a lot of diversity of where the income and the revenue is coming from. And it's exciting to see what was a fragmented owned asset class then start to become portfolio-tized, understood, and working its way into the mainstream real estate, the institutional.
A lot different than when you and I were on the virtual Flex event last January. Brett Turner, I'm going to turn to you for a second. He mentioned institutional capital. You guys at BKM are doing massive deals, buying a ton of Small Bay. Tell me what the mood is like among investors towards the asset class in 2026.
Yeah, it's hot. It's super hot. Not all of it's super welcomed, right? It's hard to buy now, but everybody's jumping into the space. We saw that back in 2024. A lot more offers, a lot of people trying to figure out where to go into industrial next. The big box space had been oversupplied. Interest rates were up. And Small Bay just hung in there, man. I mean, we'll talk about this more and more, but it's been phenomenal to see, both on the tenant side and the capital market side. More and more folks are jumping into the space. It's been a wild ride.
Jeremiah, tell me what's harder today, finding deals to buy, getting financing and equity for those deals, or operating Small Bay Flex?
Well, I operate in the small to mid-size bottom feeder, bootstrap type operator. So definitely a different animal than these guys. But I think the challenge is in the operations. I think that to me, yes, deal flow is difficult, but we'll get into it. A lot of deals are falling apart. Anyone that's in the industry knows that. Certainty of execution is really unknown. So for us, it's I'm following the leaders right there, these guys, where operations in the end will win in this game.
Brett, tell me, what tenant type are you most bullish about over the next 5 years?
Yeah, it's always been the same tenant type. It's really advanced manufacturing, and so this isn't heavy manufacturing. This isn't sort of the typical HVAC repair guy, that type of thing. What we're seeing come into the space, primarily because of technology that's now more democratized, is these small advanced manufacturers really helping out the major manufacturers in any given sector. So you've seen things like the TSMC in Phoenix pop up. For every one of those jobs, 9 service sector jobs are created, and those tenants go into our products. And they're making everything from little metal parts that are going into spaceships or helmets that pilots are wearing in Iran right now. Things like that you never really think about, but they've carved out this little niche and they have that expertise. And because of the costs, primarily in robotics, that have come down, they're able to produce these crazy advanced technologies just from a smaller space.
That's got to be fun as an owner to see your tenants doing some of those incredible things. Brian, I'm going to turn back to you. Do you have any major concerns about the sector right now? Anything that you're looking at as a challenge that might pop up? We hear a lot of positivity. Is there any other side of it you're looking at?
There's always positivity. What came up big on the panel today, and it was shared by everybody on this panel that is truly dedicated to the small bay space, is operations. Jeremiah said it. That's where you make it or break it in this space. And you get in there. It's a full contact sport. You've got to know your tenant. Your tenant doesn't have a back office. You are their real estate department, as I think I've heard Brett say, and you got to work with them. And nothing's ever perfect. And if you're not ready for that high touch, like we'll just solve whatever comes in, our inbox in the morning, it isn't going to work out for you, and it isn't going to work out for your tenant. So look, as we all scale bigger and bigger, and we have to fine tune these operations and make it more efficient, that's our biggest concern. Is we're just watching occupancy, we're watching collections, and making sure that our tenants are, they stay in business, we stay in business.
Love it. Jeremiah, if you weren't beholden to investors and equity partners, would you rather acquire existing product right now, or would you be looking at ground up development?
Existing all day. Let's forget development right now. We don't want to go down that road.
Simple, short answer. I love it. Brett, I'm going to turn to you. What's one thing that operators from other asset classes coming into small bay consistently underestimate about the space?
Yeah, I think it's the brand. What's crazy and something that I realized early on in my career is that the brand matters the shorter the tenant term is. So if you think about hotels, right? Everybody's, stays for a single night. The brand of that hotel is phenomenally important. And that goes for apartment buildings, that goes for small bay industrial, and then it gets a little bit less important when you have these long 10-year leases in the big box space, right? But that means that you need to have an identity in the product that you own. Jeremiah, we were talking about this before the podcast, but you drive by a BKM asset, it's a BKM asset. It's bright, it's loud, it's got big garish colors, it's got giant signs, things like that. We're not subtle. And that has helped us over and over again move that asset that can be built in the 80s because there's no new construction to the top of its asset class. And so it's done wonders for us. It's created an identity. It distinguishes us, from a tenant base, but also an investor base. And I think that is absolutely the key that people coming into this space certainly undervalue. I was employee number one, but employee number two was a marketing person. It really, really matters.
Thad,
love that answer.
Brett took my thunder on that one too, because that's exactly what I was going to highlight here, is that just because you don't have a brand like BKM, like a really identifiable brand in this category, you have to understand the identity of the property. And what that means is you're going to serve different types of tenants. So what I mean by that is a lot of coming from the self-storage world where we know each other, our product is a little different than BKM's in a sense where if it's that metal building that has no flash, it's galvanized steel, it's just concrete drive aisles, and we're taking automotive, we're taking steel fabricators, welders. It's a little messy, and that's fine. It's just don't pretend you're going to get the yoga studio right next to it, right? Because we're trying to target a different customer, and we don't want that conflict in there. And then I'm always doing the analysis of what's the supply for that type of product. Like we'll take that type of tenant, and we need to be competitive because we're not flashy. We need to be 10, 20% below that flashy flex that is going to attract those higher revenue type businesses, but we like the durable businesses.
Yeah.
Love it. Great answers, guys. I'm going to come back right after the break. We're going to take a second to give a shout out to our sponsors. We'll be back in 30 seconds. Stores Unlocked is brought to you by PB Brown. Over $1 billion in ground-up construction delivered, from single-story to Manhattan high-rise, institutional grade, engineered for performance, and designed to stand out. Great storage catches the consumer's eye, drives traffic, and helps lease-up happen faster. From Manhattan to Miami, California to Hawaii, PB Brown is the GC to trust for your multi-million-dollar storage development. Brian Whitmer, I'm going to come back to you real quick. I want to ask a question. I'm going to open this one to you, Brett, and Jeremiah as well when Brian's done answering. But interested to know, I know you guys are doing development, but you're also pursuing existing assets. What are you seeing on the ground today in the small bay market?
We're seeing what everybody wants is functionality for their space, which gets back to what you guys were talking about, which is if I go to a McDonald's in Seattle or I go to McDonald's in LA, I know what I'm getting for the hamburger. right? And so these tenants, they want to go somewhere where they know their space is going to be functional, the mechanicals are going to work, they're going to have places for their cars. And I think as this space elevates and matures from what was a kind of a mom and pop, very fragmented, or maybe it was an ancillary build or use in a business that somebody owned, and now we're trying to professionalize it. It's saying, how do I give that consistency to the tenants of what they're looking for? For us, you get an office, you get a bathroom, you get a warehouse, you get image, identity, security, and good lighting. Right. And I think that's, our tenants are choosing us over others because of the consistency and because we're trying to say, what is the lowest common denominator that our tenant base wants, and let's deliver it.
Jeremiah Boucher, same question to you. What are you seeing on the ground today in the market?
What am I seeing? I'm seeing prices high. I mean, like forecasting rents that may not be achievable. Cost to build way more than I think that people understand. The downtime of tenants having to actually enter units. If you're, it's just it's a very diverse category, right? You got small bay, you got flex, you got contractor bay, you got mid bay. BKM does a great job identifying those categories and trying to standardize it because the industry is kind of the Wild West. So I would highlight that the challenges in my eyes is you leasing is tricky right now. You have to, in some of our markets, offer concessions. Obviously, you have to pick up the phone. You have to walk the tenant through the lease. This isn't a traditional commercial transaction where these are savvy individuals. They're not many times going through a broker channel. So LoopNet might not be the best avenue to attract these tenants. So I just have to say, like, from a commercial real estate standpoint, this category, like Brian was saying, is really hand-to-hand combat. You got to touch and know and connect with your tenants consistently.
That's perfectly fitting for the training you do to stay in shape. We'll get into that a little bit later. I'm going to come over to Brett Turner. You guys have been very, very careful to have a very specific idea of what a BKM asset looks like. How important is that today as the market has more attention to it than it did when you guys first started out, to not have shiny object syndrome and go after every different, version of what small bay flex might look like?
Yeah, you're absolutely right. Look, every time we've never lost money.
You can say that as many times as you want on my podcast, by the way.
But we've never lost money on a transaction. But the times that we've come a little bit too close was always because we chased the opportunity and not the thesis. Right? Having a strong thesis, understanding what you're buying, understanding what you're good at is absolutely paramount. Now, we all met at the Atlanta Small Bay Summit. 650 people, packed wall to wall, sold out 3 months ahead of time. But there's a lot of new entrants into the space, right? And those people are sort of chasing the opportunity, not necessarily sticking to their own thesis. Now, that doesn't mean that they can't move their thesis or things along those lines, but I think that is something that is maybe a little undervalued in this market. And to Jeremiah's point, prices are up. People are, trying to get into the space, trying to figure out an entry point. And I think that's, just sticking to what you know sounds so basic, but folks need to remember that.
Jeremiah, you mentioned earlier, you and I got to know each other from the storage industry where we first got connected. And we've seen a lot of pain from people that sort of started riding that wave in 2020, 21, 22, when the full COVID boom in storage had taken off. Do you worry that we might see some of that same issue in small bay and with the massive amount of attention that's come to it in the last year, given your boots on the ground and what you're seeing operationally in the product you own? Is maybe some of the excitement overblown based on the reality of what you're seeing in the market?
I mean, it's always geographically driven, right? First thing you're going to look at is the barrier to entry. So certain markets are going to have tremendous barriers to entry. And I think, and now one thing people aren't really talking about is access to power. In Massachusetts right now with Eversource, 3 years to get power to your site. So that no matter if you build it, there's buildings next to ours that haven't got power in 2 years that are ready to go, C of O. So I think that we have to look at that supply constraint in terms, but then in Texas, you can build in 120 to 160 or 180 days. So it just depends on that market. But I think it's going to shake out where I don't think we're going to see the storage explosion that we did. I think it's a little harder to do, especially with the cost basis. Small bay, when you start cutting down into these 2, 3, 5,000 square foot spaces, the MEPs, the mechanical, electrical, plumbing, and plus your fire suppression and the walls, like the cost to build gets extremely high. So it'll happen. But I think in the end, we're going to shake out well. And not to take too much of the mic, but I really am excited about what Brett was saying, even in like lower tier, not type class A assets, but B class assets, automation, but not only automation, but geographic specificity where, I couldn't believe it. We're looking in North Dallas at buying just like an old and like a newer metal building, but nothing flashy. Amazon signed a 5,000 square foot lease, which is crazy. And then in Vegas here, my buddy in an investment community, his buddy sold a manufacturing company, a pick and pack. Really, no, it's just really a warehousing company. He sold it in Southern California, bought a warehouse in Vegas, and now he has robots doing all his pick and pack, and he only has 3 employees in that actual space. So we're going to see that geographic advantage, in my eyes, is going to be the trend for a long time to come, rather than that 150, 250, a million square foot warehouse out on the suburbs or in the periphery of major cities.
Jeremiah, I love that you brought this up. I mean, the robotics that are coming into the space is absolutely staggering. Do you guys know what a cobot arm is? My team always makes fun of me, but there's those little robotic arms, and they pick up something, put it down somewhere else. It's called a cobot. 3 years ago, that cobot cost about $500,000 to $750,000. Today, it costs about $40,000. You add a little bit of AI visualization, and that cobot costs about $100,000. But everybody's got a bank or some savings or something along those lines that they can come into a 5,000 square foot warehouse, set up about 5 of those, and they take about 100 amps of power each. They can pick up and they can work 24 hours a day. They don't need to take lunch breaks. They don't need to take vacation. They don't call in sick. And so if you were in 15,000 feet, theoretically, you can now come down to 5,000 feet because instead of an 8-hour a day, you can work 24 hours. But what that also means is that tenants are looking for more power. Power is becoming a bigger and bigger issue. I think this is going to be absolutely the next structural shift of our product type.
Brian Whitmer, want to give you a chance to chime in there if you have anything to add.
It's a lot to unpack, but it's good. And this, as we are building, look, we're trying to say, where's the puck going, right? And I listen to Brett, and I watch what's happening out there in the entrepreneurial economy and the high school kids that are looking at space. I'm not making this up, right? Where they come and they've got the printing machines and they're making whatever because they now have avenues to sell it on Etsy or Insta or wherever. And you have this maker economy that's going on. And when we do the new construction, everything Jeremiah said is absolutely on point. And we're trying every day, trying to say, how do we buy our lights cheaper? How do we make it more efficient so we can bring more of this out of the ground? And the one thing that costs a lot, and we're making a decision now that'll impact it 4 or 5 years, is do we invest now? And do we fight the power company to get us the amps so we can, we can do 200 amps or 3-phase, even to little 1,500 square foot suites, because you don't know where it's going to go. But guess what? I don't think it's going to regress. And hopefully it pays off in the future because we're making the decision to put in that heavier power.
Brett Turner, I'm going to come to you to lead this one. You and I had a conversation a few months ago when you're on my other podcast about, and it's something I love about Small Bay. I'm looking out my window at a 3-story self-storage facility that's being built, and it's literally being built on a parcel in between 2 other self-storage facilities. In self-storage, you can go vertical. In shallow bay and small bay, you don't have that. We haven't figured out hovering cars yet and hovering trucks, so we don't have that ability to go build multi-level. How does that insulate this category from some of the oversaturation? And talk to me a little bit about some of the protections that we have in the space from really not being able to get oversaturated.
Yeah, look, it's supply, right? Jeremiah hit it right on the head. It cost a fortune. You haven't seen any major supply since the 80s. You saw a little bit around 2000 to 2006. Most of that got sold off as condos. You're starting to see it again with these metal buildings simply because there's so much demand and nobody's building it, right? This is 100% a supply constrained market. about 10% of what I sell to redevelopers, somebody that's going to tear it all down, put a big box that has 50% site coverage versus our product type, which has 30% site coverage, apartments, things like that. It's a horrible, inefficient use of the land. Nobody should take an infill piece and put a multi-tenant industrial business park on it because you get 25, 30% coverage, right? And so it's the first to go. It costs a fortune. It certainly insulates you from any kind of new supply. And that's why we saw this shift in the institutional markets from the big box space down to the small base space as interest rates started to spike and new construction in the big box space just didn't make any sense. And so 100% it's insulated. Nobody's going to build it. Again, you're seeing metal buildings starting to pop up. People are trying to figure it out. I got pitched inflatable buildings the other day. Everybody's trying to figure out a way to make this work.
Myself included. I'll throw that in the ring. I love that. Jeremiah, I want to come to you for a second. We obviously watched and I say you've been in it for far longer than I have, and I kind of caught the tail end of it, although it continues to accelerate in storage, the incredible institutionalization of the asset class. We saw Public Storage announce earlier this year that they're buying NSA, one of the other major REITs in the asset class. Big private equity is buying things. I mentioned off camera a deal up in Syracuse, New York that traded for less than a 6 cap, a small secondary market. Where are we at in the institutionalization cycle of flex relative to obviously storage now? We're seeing negative cap rate transactions relative to what you can get debt at, not negative margin deals. Where are we at in flex in terms of the institutionalization of the asset class in your estimation?
Well, these guys are better answered to that, but I'll tell you my perspective. We're in the early innings, I believe. I think there's a lot of runway here with the trends that we just talked about. Next, I think that you got to know where you're at in the food chain. I mean, BKM, they're near the top, but there is that next tier, and I know they're looking at them somewhere where, it's REITs and the large Blackstones of the world. But right now, it's all shaken out like storage 10, 15 years ago, where the aggregation play is real. It's just we're doing it at different levels, all of us on this call. Because I think if you're going to get into this space outside of being a contractor or locally, geographically located next to your site, which there is, that's a lot of how this stuff was built, just like storage, Dad, that we saw how the whole category grew. But now we're seeing a phase of buying it at obviously a higher basis from these individuals, these mom and pop owners or local business owners. But you really have to think about what Brett said of the thesis. The actual thesis is more important than the opportunity. That bit me bad, doing all of these different opportunities that look great on paper, and some of them are, and that makes you even think you're more confident that you could do more than you're actually capable of doing. So the thesis around small bay, in my eyes, value add and to a degree development is you need size, you need scale and a geography. That way that you can actually execute on the standards that institutions are expecting. And obviously LPs or investors are expecting. And you can't do that with 20,000 feet. You can't do that with 50,000 feet. You got to have at least 100,000 feet in order to give the service, the touches that you need to give with multiple tenants on site. So I think there's a huge opportunity. It's just how you capitalize on it. Can you really maximize it? Or do you just get a couple wins under your belt and you let the boat, sail by because you didn't see the bigger picture?
Brian Whitmer, I'm going to come to you. Obviously, you're in Jersey City right now. For those that are not from the East Coast, that's literally the Hudson River away from New York City, a center of money in our world. What are you seeing? And you're at the NAIOP conference, as you mentioned earlier. What are you seeing from an institutional level as far as interest in this space? And what do you see happening over the next few years?
We've really seen the institutional interest build. And for us, it started, let's say 2-3 years ago. It's really interesting. I'm following it. I see the trends. I see the big moves that BKM is making. And then you get the big splash, like with you guys at Kane Anderson. And the next 1 or 2 weeks for us, because we're here in New York and we have a lot of friends and they knew we were into small bay, and they'd be like, hey, come into institution XYZ, meet with us. Sometimes it was with the private equity guys and the real estate guys together, and they're trying to figure out how do they handle us. they've done the car wash roll-ups, they've done self-storage, they've done manufactured housing, and they're like, okay, if we're going to go granular, we may have to build a portfolio of $5 to $15 million singular assets. And that's where they just can't figure it out. And they're like, once you bring me a portfolio or an opportunity where I can put out 20, 30 million at a time, which is efficient for the institutional capital, we're much more interested. What Jeremiah was going at is right. You're building towards it. And I can tell you that when I see something hit the market now, if it's over 100,000 square feet, it's in a major metro, there's going to be at least 100 basis point cap rate gap, because the institutional capital, it's big enough and it's efficient enough to buy third party management, whatever they're going to do, they're going to chase it. Where if I can see, right next door, there's an asset that comes out that's $5 to $10 million, it's going to be a totally different buyer pool, a totally different cap rate, in a different sort of bid sheet that's chasing it. And look, we're at the stage now, know where you're at. We're hunting those one-offs, trying to build that portfolio and get scale within different geographies. And look, I'm the biggest proponent. And as I watch these large metal panel portfolios trade in Florida and Texas and wherever, we're watching this build to where, one of the best things I heard come out of Atlanta was that, are you building for capital or building for you? Right. And I think that over time, that metal panel, it's going to lose its funk, and it's going to become more recognized and acceptable at the institutional level at scale once we have more data and that's proven over time, and who the tenants are and the durability of it. So
I can tell you, we've certainly seen that in storage, right? Where metal buildings even metal paneled exterior buildings are trading at cap rates in major markets under 5 in the storage sector. So the institutional capital got over that aversion in storage in a very strong way. S3 Partners, we're sort of hopeful that it gets over it in the small bay flex way too, as that's typically how our build style is. Brett Turner, gonna turn to you. Anything to add to that conversation as far as the life cycle of institutional capital?
Just big picture, the allocator model, is becoming more and more challenged with, you sort of have the fees at the allocator, you have the fees at the operator, the investors obviously don't like that. So what we're seeing as institutions try to get into this space is not only are they looking to be LPs, but they're also looking to be partners in the company, in the OpCo piece, and so you're seeing this consolidation trying to roll that up into the overall source of capital. And so that's been something that's been ongoing. People are trying to do more of this M&A from an investor standpoint. And I can tell you firsthand, this is a people business, right? Brian and Jeremiah both said it. You got to have the people in place. You got to have a high touch, high volume business. I always say this is speed and volume. We're not sharpshooters. We're not trying to do one lease every 10 years. We're doing 8 leases per day. You miss a day, you got to do 16 leases the next day. Like, it compounds, man. Now, to have that, you need a strong operating company, right? And so the scale of that company is going to be inherently limited by how well you can manage the people, the process, and the procedures. And so that's really the juxtaposition that this capital is in. And as it gets more and more institutional, how do they find those key operators with good people, process, procedures to take positions in?
I'm going to follow up with you on that question because it's interesting for us. Obviously, I keep talking about storage because that's where my background was before discovering small bay. I can name 10 third-party management companies off the top of my head that will come and manage your storage facility for you for as low as 5% of gross revenue, right?
Yeah.
That doesn't really exist in the small bay space in any great way that I've seen. Do you see that becoming something that exists in small bay?
Yeah, it's the first question I ask: who's managing the asset? And I can tell you, if they've got, no offense, because these are great managers, but a CBRE, JLL, folks like that are managing it, that is a huge opportunity. We did a deal up in Seattle, and it had 384 tenants. Massive project. It was about 50% of the market share within the Kent Valley. And they had one one property manager managing that portfolio plus another 8 assets. And no surprise, rents were below market. Now, we took rents from 80 cents gross to 225 net. 80 cents gross from 225 net. And we put 11 people on the asset. And so again, it's a management intensive business. Third party management, God bless them, but it's too much of a volume game. You got to have high touch, and you got to think like an owner. The vast majority of renewals, what we do are done from our property managers, right? They're on site every day. They're knocking on the door. Hey, Joe, how's your business? Oh, you got a new contract? You need another 3,000 feet? I got a unit next door. Let's go do that one. And so even though we're signing 3-year lease terms, the average stay is 8 years because we have that on-site management, that high touch that Jeremiah mentioned. You got to be on top of these guys. They're always moving. You got to put that jigsaw together.
Jeremiah, I'm going to come to you with this one. One of the things we're seeing a lot in storage management is remote or hub and spoke, right? Where there's not a full-time on-site. There might not even be an 8-hour on-site manager at a lot of stores, especially in more secondary and tertiary markets. You're talking about small bay with this idea of being very hands-on. Is there a version of operating one of these facilities where you have a less personnel intensive operating system, or do you really need to have those human beings touching base with these tenants on a regular basis?
Well, these guys would know better than me. I mean, I'm taking some of the storage model and I am trying to translate it into the small bay model because I do see the lack of sophistication, why these guys are successful, and building that platform is the competitive edge. But what I look at, just so it like bringing it back to the audience, Dad, where these individuals, most I would imagine, are not large institutional grade funds. They're bootstrapping it, trying to build a portfolio. So it's like, it's the hardest part. What Brett said is so accurate, where the market is very competitive right now. A lot of investors don't love real estate at the moment, right? With stocks and private equity doing so well. And then in turn, they're beating you up on your fees. So at that point, you're like training for the Olympics. You have to work a job, which is operate the assets, and you have to actually go on acquisitions and train and play the game. So it's like the momentum is against you in the beginning. So in order to do that, you have to be creative and savvy to get to enough aggregation to be able to do the things we're talking about right here, because $80,000 to $150,000 employees take a lot of fees to get there.
Yeah.
And so in order to execute on that, to answer your question, Thad, like I think in my eyes, like in the beginning, you can be a little nimble and have maybe a local property manager, which I don't love, but you have to do what you have to do in the beginning. But you have to have asset management. So if that's you, or if that is eventually when you have 100 to 300,000 square feet, at least a little bit of a aggregation, then you have somebody on top driving performance, and then on top of the leasing, because this stuff is make or break on the leasing, because it has to kill you where you put $500,000 of CapEx and you hire all these people and you got a nice product and you got a good sign and no one picks up the phone and no one knows how to give an application. And trust me, I've made my mistakes. So it drives me absolutely nuts. Google My Business isn't done properly. You're not getting any reviews. So I think at any level, this is a major focus for anyone that wants to get in this.
This is why I love Jeremiah so much. He starts the answer by saying, I'm the wrong person to answer this, and then knocks the answer out of the park, which I love. Fantastic. Brian Whitmer, going to go to you and building doors and spaces. Same question. Are you feeling like this is something where the operations are going to get leaner with technology, or do you still feel like this is going to be an operational business that needs the human touch?
It's going to be an operational business that needs the human touch, because that's how you're going to keep your buildings full. That's how you're going to have relationships. That's how you're going to have 8-year average tenures. Look, the people that we're renting to in small bay, they be mom and pops. They can be all the way up to Fortune 500 companies that need some small space in that market. Nobody, when they have an issue, is going to want to talk to AI. They're not going to want to have it automated. They're going to want to make a phone call, have somebody deal with it, and go back to their business. They're small business owners. That's what they know. That's how they operate, right? They're not going to sit on hold, or they're going to go to somebody else who's going to do it better. But what we're trying to do is bifurcate between, that's the boots on the ground operational side, where you're going to make or break and win the game. But then how do you become more efficient on the front end? We're trying to take a page out of the self-storage, which is self-storage to me seems like they don't want you to see a person up front, but up front, it's very commoditized. Do you like the space? And let me break this down a little bit. So when we build ground up, we have our spec. It's a 1,500 square foot box, office, bathroom, warehouse space. That's it. We're not doing build outs, and everything we build, we deliver to that spec day one. So whether it's going to be in Orlando or New Jersey, it doesn't matter. We're going down the path of go on our website, tell me what location you want. I'm going to generate a code after I know a little bit more about you. You're going to go look at the space. If you like it, come back, background credit check, sign the lease, and then I'm going to give you a permanent code or I'll get you a key and it's your space. Trying to take out the front end that if you need a little hand holding, I'll give you. But if I got to send somebody out to potentially lease space renting for $2,500 a month and you miss hit 2 or 3 times, you're in the red. So we're picking our spots to put in those people processes and use technology to be as efficient as we can, because like Brett said, it's very high volume. Every day it's renewals or every day it's showing space that's vacant, right? And that's where we're going, and that's what we're learning every day, how to do better.
Going back to, I mentioned earlier, one of the reasons I love having these three is they're a little different in terms of their background coming in, but also a little different in terms of the actual assets that they're necessarily building and operating. Brett, of course, you're more 5,000 to 50,000 square foot units as opposed to those super small 1,500, what Doors and Spaces do it from a ground up side. I got to follow up, and I should have followed up earlier. When you go from 80 cents of modified gross to 225 net, triple net, does that allow you to have 11 people that are able to service the unit? That value add, was it worked out all right in terms of the numbers on that deal?
Yeah, it worked out okay. Look,
I love it.
this is never going to get away from a people business. And I think, those people up front meeting the customers are hugely, hugely important. Now, Brian said it best. It's a high volume business, which we have about 5,000 tenants. Any month we have 5,000 data points, right? You can't parse through that amount of data without using some kind of technology. We put $2 million into technology upfront early on when we didn't have the money to do it. I was talking to my CEO, Brian Whitmer, and I'm like, what are we doing here? Let's just go buy some assets first. He said, no, it's going to be great. And it turned out he was absolutely right. Now what we're seeing is sort of that next generation of technology shift with AI that can go through that data on a monthly basis, pick out trends, query, large data sets, and really come up with who's growing, who's contracting, how are we getting into trouble, things along those lines. I don't think that this is going to replace anybody. I think it's going to be a helping hand to the people that we have now and really make us much more of an expert in our field. We're putting a huge amount of money into AI. We've got people in the team that are dedicated to it. We've got consultants coming in to work it all out for us. This is going to be a gold mine for the person that can do it and do it really, really well.
It's my favorite saying is AI is not going to take your job. Somebody utilizing AI better than you may take your job, right?
Yeah.
And I will say, I've kind of been talking about storage, and I would like to say that the people that are succeeding in storage are utilizing AI and technology in a way to benefit the customer, right? The people that are using it to make their own life easier are not winning this race in any way, shape, or form, but we're utilizing it in a way where it's really benefiting the customer in a way that solves for their problem. Those are the ones that are winning in this space. Jeremiah, I'm going to come to you for a second. Your background, we talked about your background in storage, also really successful in the mobile home park business. How did those two backgrounds, as you started getting into small bay flex, how did they influence and prepare you for what flex is doing, or is it completely different? Are there any lessons that have crossed over?
No, I would say parts of flex are the mobile home parks of the industrial sector. I mean, maybe not BKM stuff, but yeah, I would say it's a lot of similarities. You have multi-touch, high-touch, tenant base, multi-tenants. You're marketing directly to the customer rather than going through a lot of brokerage channels at times. So it's very similar. And there's a huge diversification of the asset category. You got the Sam Zell's equity MHC portfolio. It's a public REIT. And those are the ones that your grandparents would live in Florida or California, really top tier. And then the area that I got in was a bottom feeder. I'm working off of, in the beginning, like West Texas. As rough as it gets. So, and now you evolve, right, in your career, in different quarters of your career. And now at this stage, I don't want to do that. I think the flight to quality is great. But at the same time, that's where opportunity in real estate exists. because at the right price and at the right location, there's a use. I mean, someone's going to need it somehow, some way. And there's an operational advantage where it's still an investment asset, but choose, I guess, be careful what you wish for. All of us here, it's funny. You sometimes when you get something, it's not exactly what you thought it was supposed to be. So there's pros and cons to everything, and I think there's opportunity for everyone out there. Just got to know your edge, just like Brett said. Stay in your lane, stay focused, do it over and over, and keep it simple.
I
Know
got
your
your book,
product, know your
Finding Your
customer,
Edge.
be enthusiastic.
What's that, Brett?
Sorry, Brett, didn't mean to interrupt you.
No,
Say it again.
go ahead. Yeah, know your product, know your customer, be enthusiastic.
That's it. That's perfect.
Jeremiah's got that enthusiastic part down. I was going to say, your book is buried under 4 other books on my desk, Jeremiah. I almost pulled up Finding Your Edge. You just said, know your edge. Yeah. Jeremiah, great book. If you guys are voracious readers like I am, wrote a book called Finding Your Edge, which is fantastic, and can hear a little more of his journey. Brian Whitmer, I'm going to come to you. 2 decades you spent in New Jersey, greater New York City, in the brokerage side of things. What convinced you to move into the ownership and development side with Doors and Spaces?
It was the opportunity, and it was watching it transform and mature. Right. And throughout my career, I watched self-storage, and I watched manufactured housing assemble and institutionalize, and I watched BTR, and I watched iOS, and I finally said, look, I identify with small bay. I've seen some of my family do it on a very small scale, and coming from the apartment side and owning and operating and brokering, I said there's a lot of similarities here, and I think that how you operate it, the sense of urgency, and that look, you have a tenant that's looking at you today, you got to chase them and sign them, because the minute they walk off your property, they may go somewhere else. And I think small bay is very similar to that. And look, for me, it was, I could take my dollars, or the ones that I syndicated early, and go farther and buy smaller assets and build and figure out the operations to then put it on a trajectory that would grow quick. And, I think we all share the same mentality here. Some of us are at chapter 205, like Brett, where we're at like 4 or 5, but like we're all kind of saying we're putting this together in a big way. We're going to assemble it, aggregate it. And when we look back in 4 or 5 years, it is one of the institutionally accepted asset classes. And we were all part of getting it there.
Brett, I want to turn to you. A question that, and we had a conversation last week on a separate call, that you brought something up that I thought was fantastic. I think you guys started BKM back in 2016. Am I right on the date?
2012, 2013, something like
2012. That. I shortchanged you a few years. So well over a decade now that you've been doing this. This hasn't been an easy journey at every step of the way, right? It's easy for us now to look at BKM Capital Partners and say, hey, you guys are doing billions of dollars of acquisitions a year. But there's been some struggles along the way. Talk to me a little bit about building this company and getting to the place you were, and some of the setbacks along the journey.
Yeah, it was before I had gray hair. Now I got a ton of it. So I should tell you what it is.
At least you have hair. I'm not judging.
That's no, look, people ask me would I do this all over again, and both me and our CEO Brian Malley, I'd say absolutely not. It was really, really hard. Back in 2012, 2013, nobody had ever heard of this product type, right? It was all mom and pops who owned it, and that was sort of the opportunity that we had seen, is to take that institutional low cost capital and put it into, predominantly mom and pop asset class. Now we hey, why don't we go raise a fund, have some discretionary capital? Wouldn't that be great? And it would be great, but it is so hard to build. It is 4% of first time funds actually get funded. And we spent the first 3 years, to your point, you're just banging on doors, trying to get in front of folks, and I remember being in somebody's office in a major institution that everybody's heard of, saying, hey, these are small businesses, they're great. And it's like, okay, so it's got less than 500 employees. I'm like, no, it's got 5 employees. And that was the end of the conversation. But, we did get funded. We raised our first fund about $140 million, and, really got us off the ground. But it was sheer effort. I mean, there was no balance sheet, there were no seed assets, there was no, you know, seed portfolio that we were buying. It was literally just hustle. Yeah, and so yeah, it took a lot of effort to get where we were.
Know that as someone outside looking at the journey, so much respect for that. Just knowing what it takes to go knock on a door when you've been told no over and over and over. I'm interested to ask you, obviously the way the economy shifted over the
Mhm.
last 10 years, you brought up robotics. It's one example, but as I research small bay flex and different things, we're seeing this massive growth in small business owners, even among
Yeah.
business owners that don't even have a single W-2 employee. They might be all either by themselves or 1099s. Are you starting to see a shift in the way the market and when you're going out to raise money reacts to the idea of a business with 5 employees?
Yeah, if you've got a soapbox, just give me a minute. So, yeah, if you look at just generational shifts, right? You have the boomers that are now 72% retired. They're selling their small businesses to the next generation, primarily the millennials. That's me. I'm 42 years old. The average age after COVID of a small business owner just dropped by 10 years from
Oof.
55 down to 45. Now, if you think about that new generation that's coming in, buying those small businesses, creating those small businesses, they're tech native, right? I was in sixth grade when my parents got our first PC. I was in college when Facebook came out. Now here I am trying to figure out AI. That generation is going to figure out how to grow those small businesses, get new energy, new life in it
Technology.
through a technology channel. And so it's certainly a demographic shift that we've seen. It's a new life that's come into these small businesses. It's a big trend. If you look at the growth of the economy, it's in the Mag 7. There are 7 companies that you can work for that's actually pushing the economy up. Now, small business, it's 47% of the American workforce. It's 43% of the American GDP. This is true American grit. You're right. These guys are going to fight till the bitter end to not let that business fail. And so if you're going to place your money on something, are you going to place it on a big user, somebody like the Mag 7 that's got 500 locations, and if one of them is, in the red, they just shut it down? Or are you going to place your money on the guy that's taking money out of the till, trying to feed his family at night? I'm going to take that guy all day, right? And we saw that. We saw that with the GFC, COVID, interest rates, uh, tariffs. We've seen it time and time again, and it's proven out to be true. I'm buying a large portfolio from a major private equity player, and the reason that they bought the portfolio in the first place was because they thought that this small bay multi-tenant industrial would be the first one to go if the economy got into trouble, and it would be their canary in the coal mine for the rest of their assets, right? Their public stocks and bonds and things like that. And it turned out to be totally wrong. And so as a result, they said, this is a bad idea. Let's get rid of it. Let's go find something else to be that canary in the coal mine, because these guys stick with it time and time again. And it's always proven to be true.
You just nailed exactly why I'm so excited. I love storage. I love the storage industry, but the idea of building something for someone to go store their Christmas ornaments in does nothing for me personally as a human being. The idea of building something where someone can go build their small business, and coming from a family of small business owners, my dad and his 5 brothers all grew up on a small farm, and every one of them ended up owning their own business. And so that idea of providing a space for an entrepreneur to go and make something of their life in the United States I'll stand on that soapbox. I'll hold the soapbox up below you and
Fair
let
enough.
you stand on it, quite frankly. All right, listen, we're coming up. It's hard to believe we're 52 minutes into this thing. So I appreciate you guys for bearing with me. I'm going to shift the gears a little bit as we finish up. Cannot thank you guys enough for the incredible insight. I want to tell anyone watching, if you want to hear more about the story of the 3 of these gentlemen, all of them have been kind enough to be on the Stories to Behind the Door podcast that I do. It's a little bit more of a personal story podcast rather than talking so much about the business, but you can go subscribe to Stories Behind the Door on YouTube. Brett and Brian and Jeremiah have all graced me with their presence for a half hour on that. So you can hear a little bit about the personal story behind their business acumen as well. I'm going to get a little more personal now and kind of wrap this up on a fun note. Jeremiah, you and I have a shared love of martial arts. I know you do some MMA training. in your spare time, which you don't have a lot of. But I want to ask you, how important has that been? Obviously, all three of you guys in incredible shape, and the way you guys carry yourself. How important has your exercise regimen and your training been to what you're carrying in terms of mobile home and self-storage, and now in the small bay asset class?
Well, I can't live without it. There's a lot of pressure at times, and if there's no valve, it goes in the wrong places. So that keeps me disciplined. It keeps me sharp, keeps me mentally attuned. I think every driver entrepreneur has that obsession and that passion that they need to focus in certain things. And at the end of the day, sitting at a desk for me doesn't do it. That's just, I don't think we're built that way as human beings. And then I think the other side of it is just like doing your routine and being consistent. I don't know. It just gives you that grounded mentality about life. Like, it just puts it in perspective. And I'm 45, brother. So by no means am I sparring much. And it's getting hard. It's more stretching and a lot of recovery nowadays than it used to be.
Hey, you're 7 years younger than me. When Brett talked about getting a computer in 8th grade and having Facebook in college, just to date myself, I saw my first website my first year of graduate school. So you guys are all a little bit younger than me. Brett, I'm going to come to you.
I'm not going to ask you what website that was.
Please don't. Please. I will say I was in the major computer room at Syracuse University, so it wasn't that bad. In my defense, Brett Turner, I know this too. Your gym routine super important to you. How important has that been in terms of a backbone for what you've been able to accomplish at BCAM?
Yeah, look, I wake up super early, and I'd love to tell you that's because of self-discipline, but really it's just crippling anxiety, right? So my mind gets moving early in the morning, and I got to get up and I got to do something. And so having that relief, that place that everybody kind of knows your name, and you get to relax and not think about real estate, just the 225 pounds that it's about to crush your sternum. That's really, really important to me. And so it's a big passion of mine. It's a passion of my wife's. We're very into it.
Appreciate it. Brian Whitmer, I'm going to throw you under the bus. You and I have never really talked about this. What I do know is you're in great shape. Anything on your side of the life that helps keep you grounded and kind of get away from some of the stress?
Like I said, compared to Brett and Jeremiah, I'm a lover and not a fighter. So I'm not in the same class, but I'm trying to keep up. Look, I grew up as a very competitive shooter where perfection was necessary. And you had to wake up every day, and sometimes you're going to win and sometimes you're going to lose, and at a very high level, right? You can compete, we can hit each other hard on the field, and when you move off the field, then we're all friends and we all got to take care of each other, whether it's a cottage sport like shooting or whether it's in small bay, right? It's, we do what we do for ourselves and our companies, but then we're all bear hugging like we are right now, trying to figure out where to take this sport. And I think that's what I carry with every day. As I wake up, I help everybody I can, I pay forward, and hopefully the energy comes back one way or the other and helping us advance our industry and on our business.
Can't thank you guys enough. What an incredible conversation. Amazing insights from all three of you, as I knew I would get. And just once again, want to say thanks to all of you. I know an hour of your time is very valuable, and you can't really thank you enough for being willing to come and share a little bit on the journey. Before I wrap up the show, I want to give a quick heads up on a couple of upcoming events that are happening in the storage space. I'll, of course, keep you guys up to date on anything coming up in the small bay flex space, as well as we have more live events there. Couple of shows coming, the Mid-Atlantic show in the Gaylord National outside not New York City, Washington, D.C. That's June 11th and 12th. And then an upstate New York conference put on by the New York Self-Storage Association. Always do amazing events. That's coming up in June as well. You can go to their respective websites for more information. One more time, thank Brett Turner, Senior Managing Partner of BCAM Capital Partners, and co-founder Brian Whitmer, founder and Managing Director of Doors and Spaces, and Jeremiah Boucher, founder and CEO of Patriot Holdings. I am your host, Thaddeus Campbell. That's it for this week's episode of Storage Unlocked. We'll see everybody next week.